We can answer questions, but we're going to talk about what's going on in healthcare now through the corona situation and the pandemic, and then what we're anticipating for 2021. If you asked us 2 years ago, we could probably give you a 24-month forecast, and today it seems to be month to month. So we're going to go through some trends, what's going on in the marketplace, what to expect, and then just open it up for questions to you. Brian, you want to get started?
Sure. Sorry, sometimes when I share my screen and never sure which one's showing. So do you see the presentation on there? You can hear me?
We see the PowerPoint part, but not the slideshow.
Yeah, that's fine. That's fine. I'll just go with the PowerPoint the way it is. So again, thank you. I appreciate the opportunity to speak today. Please, interrupt us as we're going through if you have additional questions or you want us to go a little deeper. Again, always want to thank Pam for the great partnership between the Chamber of Commerce for Greater Montgomery County and my benefit advisor. We appreciate it, and always enjoy working with everyone in the organization and on the phone. We'll be relatively brief in kind of relatively in our remarks, but again, please interrupt us as we're going through. Just want to set two slides as kind of I'll call it pre-COVID, and then we'll talk about how COVID's going to impact 2021, and then what our expectations are kind of coming out of it. Slide that I think most people have seen over the years, just talking about increases in costs, right? So this is a slide that kind of talks about the average annual premium for covered workers with family coverage. If I did this for single, if I did it with employer coverage, right, it all has basically the same trajectory, which is, we've seen costs pretty steadily rise throughout the 2000s, right? And going into 2019, really going into 2020, we had at least in the small group market, some relatively, lower increases in 19, and we're kind of expecting to see them spike up a little bit higher in 2020, kind of pre-COVID, and I'll give you an example of that moving forward. But one thing that we've seen as these costs have gone up, one of the other things that we've seen gone up pretty dramatically is the deductibles, right? So if you kind of look at this slide here, right, you'd notice from 2009 that there hasn't just been increase on premiums. What's happened as premiums have gone up, there's been a cost shift, right, from employers shifting some more dollars back to the participants. Therefore, even though maybe the premiums here, where you can see family premiums have gone up, 54%, the actual percentage and the deductibles have gone up significantly larger, right? And so that's the common theme that we're running across here. And there's some things that are happening in the market that try to address that. And we'll talk about that on kind of a carrier by carrier marketplace. So, both of these, as I said, led us to believe going into 2020 that, we were going to start to see go back to double-digit increases. 2018, 2019, specifically for Independence Blue Cross, specifically for the 2 to 50 market, which I'll spend most of my time talking about today. We actually saw increases below 10% for the first time in a number of years. Seems like things had kind of stabled off there. But when Blue Cross filed their rates for this year, you actually saw kind of a weird anomaly, which is, fourth quarter or rates for all of 2020 get filed in 2019, right? So we're seeing fourth quarter increases for Independence Blue Cross in like that 13 to 15% range, right? And it really is just the fact that they did their pricing, they did all their analysis based off of 2019 trends when they kind of came forward. And what's happened since then is, right, COVID hits in March, right? And the impact of COVID has been, large claims kind of still are what they are, right? If you had an ongoing issue, you got treated, right? And you're continuing to get treated. But if you didn't have an ongoing issue, people aren't going to the doctors, right? I mean, I think from March until probably midsummer, people, weren't going into any kind of healthcare facility unless they absolutely had to. We're starting to see preventative care start to pick up a little bit. But either way, we've seen the claims for all of the insurance carriers just go down pretty dramatically. And there was a little bit of fear coming in here into the fourth quarter that, you know, the second wave of COVID or the third wave, not sure what wave we're on at this point in time, would impact commercial carriers a little more, but we still haven't seen that, right? Like, all we do know is that the first wave of COVID, the March, April, May, June, really hit Medicare, right? Hit Medicaid a little bit, but didn't really hit much of the commercial carriers, just based off of the population that was being hospitalized at the time. So, you know, moving forward and going into January of 2021, and this, actually, I got this information on Friday, so even our projections here are a little high. For January of 2021, for Independence Blue Cross 2 to 50 business, we're going to see the increases come in between 2 and 4%. You know, so not a bad thing, right? And listen, you know, anytime that we can, you know, put one thing aside like that, you know, and basically what it is that the increase year over year on an age banded basis is like 1.5%, but everyone gets a year older. So depending on what your age group is, right? You know, a 26-year-old going to be a 27-year-old is not going to increase as much as a 45-year-old going to be a 46-year-old, right? Or a 55-year-old going to be a 56-year-old. So if your average age is over 50, you're probably looking closer to 4. If your average age is under 35, under 40, you're going to be closer to 2. So, you know, overall with Blue Cross in the 2 to 50 market, we're seeing really, really small increases. The reason I kind of started with those other 2 slides is that it doesn't change the fundamentals of what was going on in 2019. You know, the COVID situation, it's just delaying it, right? You know, the cost containment features still aren't a part of the programs. You know, there's certain things that are being done, and we can talk about what you can do on an individual company basis, you know, but there is going to be pent-up demand, and the carriers aren't really sure, A, when that's going to come, or B, what the impact is. So, you know, I look at this as good news, bad news. You know, it's good news because, again, if you don't do anything, your costs are going to, and you're with Blue Cross, your costs aren't going to go up dramatically for 2021. But at some point, right, we're going to get back to that, you know, higher increase trends that everyone was kind of expecting coming into 2020, right? If you're in the 50 to 99 market, so larger group where it is experience rated, you know, because most of the carriers, so we're talking Blue Cross, we're talking Aetna, United, Cigna, all have had pretty good years. And then because the increases aren't that high, there's not a lot of new business moving around. We're seeing, you know, initial increases coming in the high single digits, getting negotiated down pretty quickly to the low single digits. And then not a lot of people shopping, because this is not a time where, you know, especially larger employers have any interest in trying to go through open enrollment, collect new applications and things like that. So there's not a lot of movement around. I will tell you that, you know, for the cases that we have that are willing to move, it's a feeding frenzy from a carrier perspective. They're all competitive. Everyone's looking to grab whatever lives they can at this point in time. So if you haven't shopped your insurance and you're over 50 lives, probably a pretty good time to shop. You know, even if you're under 50 lives, it's probably a pretty good time to look, you know, if, you know, considering everything else, that even though a 2 to 4% increase isn't bad, right, relative terms, you know, if we can find 5% savings or 10% savings, especially in an economy like this, I think that's probably something that, you know, people are going to start looking at. Any questions so far? So let's just talk about what the options are, right? So I think most people are probably pretty familiar with Blue Cross. As I said, 2 to 4%. They don't really change much on their portfolio, no real changes whatsoever. Their options in the 2 to 50 market are just traditional fully insured programs, you know, what we would call ACA plans, so the metallic plans with, you know, age banded rates. The competitors in the marketplace are really, you know, the additional 3 on this, and then we'll talk about some different ways around it. But, you know, United Healthcare does have fully insured programs, same as Blue Cross. I'll tell you, with that low increase from there, we're not going to see a lot of people moving to United on a fully insured basis. They're very competitive. They're right around the same, but, you know, what we really find is that we need to see 7%, maybe 10% savings before a company will change carriers. And like for like, that we're not really seeing that kind of savings for United Healthcare on a fully insured basis. What we are seeing though is with both United Healthcare and with Aetna specifically, they are both selling, I'll say, new programs. I mean, they've been around for a couple of years now, something called level funded programs, where both of these programs, we're seeing savings for the right businesses. What are the right businesses? The right businesses aren't necessarily an average age. Doesn't matter, right, what the average age of your group is. It's just, are there larger claims? Are there significant health conditions that the carriers may be nervous about, right? And if those don't exist, we're seeing savings in the 15-20% range sometimes, moving to either the United version, which is called All Savers, or the Aetna version, which is called AFA. Positives and negatives to the programs are, United will go down to 5 lives, so no options for anyone less than 5. Aetna will go down to 2 lives. Both of them have just changed their underwriting for 12-1 and 1-1 business. So anyone in the either with Aetna 2 to 9 space, with United in the 5 to 9 space, if you're interested in these programs, you do have to fill out individual medical questionnaires. We have a very easy system to be able to do it, to be able to make sure that we protect people's health information, but they are looking at individual medical questionnaires. If you're over 10 employees enrolled, so 10 plus, we just need a dependent level census, and we're able to get medically underwritten rates. And again, we can show sample rates, but they're not really all that worth it. It's probably worth going through the process. And again, we've seen savings in the area for the right groups of 15 plus percentage points. If you're over 25 enrolled, or 20 enrolled, actually with Cigna, you're able to get access to similar programs. All right. So, those are really the options that we see. Those are the 4 carriers that are out there. Again, 2 to 4, really just Aetna and Independence Blue Cross. 5 plus, you're going to add United in there, and then 20 plus, you're going to add Cigna in there. In order though to find savings this year, really you're going to have to go through some type of underwriting process, and it's just a matter of what you feel comfortable with and what you want to go through as far as your employees are concerned. Any questions so far? All right. So last thing we just want to talk about is, if you stay with certain carriers, or what are the options? I mean, I talked about some of these, but I just want to add in a couple other quick options. The one is, if you're looking for savings, you don't want to change carriers. One of the creative things we've been doing over the past couple of years are utilization of health reimbursement accounts. So this is even with a Blue Cross or with any of the particular carriers. The health reimbursement accounts, what that allows you to do is, as an employer, is help your employees fund the deductible. So think about it. If you have $1,000 deductible, you raise that deductible to say $4,000, you're going to save like 10-15% on your premium. But you increased your deductible by $3,000 per person. Since we know that utilization, especially for hospitalization and outpatient surgery, isn't across the board, many times what we can do is the employer can step in to fund that $3,000 only to the people that need it, and end up saving. They're not going to save the full 15%, but they might save 7%, right? Because they were able to fund that deductible for their employees, keeping their employees whole and putting 7% premium back in their pocket. Talked a little bit about the national carrier level funded products already with the Aetna and the United platform. One thing I did leave out is, if you're a chamber member with both of those products coming through My Benefit Advisor, we'll get an additional 2% discount on both Aetna and United, right? So, but you do have to be a chamber member in order to get that extra 2% discount off of the Aetna and United products. We've rolled out 3 new programs this year that I just real high level want to touch on. One is a level funded consortium. So this is, for the groups over 25 employees. We do have an exclusive program in Pennsylvania called Franklin Health, which allows you to basically buy stop loss as in a consortium, so combined with other entities in order to get a little bit more aggressive pricing. Again, individual medical questionnaires for that product, but very, very competitive if you're the right group. We also have captive program through a company called Roundstone. Similar concept, slightly different underwriting standards. So, depending on the group, we'll go one direction or the other. that allows you to participate with multiple other companies in a stop loss buying consortium or captive in order to kind of minimize your risk going self-funded. And then the last, again, exclusive program is our PEO, our Professional Employer Organization. We have a exclusive program through My Benefit Advisor in Pennsylvania. We partner with a company called Able HR. They've been in the PEO business since the 90s. They're a certified PEO. There's only about 50 of them in the country. When there's like 1,000 PEOs, but only 50 are actually IRS certified. The PEO is a great concept in just the sense of, you know, there's kind of two reasons people go to the PEO. One is just straight health insurance. So you're buying all of your insurances, right? But primarily your health insurance as a part of a bigger group. We can drive costs down. We can do this down to 10 employed enrollee or 10 enrolled employees. And basically, you know, it gets you away from ACA underwriting, ACA pricing. You get back to traditional 4-tier plans. It is United Healthcare as far as the carrier is concerned and the network is concerned. So it's very strong. And then in addition to that, you also get the buying power on the other services. So additional HR resources, you know, payroll, timekeeping, kind of everything gets bundled as a part of that package through the PEO. So it's not a concept that you've heard of before, or maybe you've heard of, but you haven't explored it. We have a pretty simple process to kind of go through evaluating whether or not it makes sense for you. And certainly love the opportunity to kind of explain a little bit more why it works for some companies, not all, right? You know, our goal is just to find the right solution for each one of the members. And so that's why we have such different offerings. And with that, I'm going to turn back over to Ray just to talk about some of the value-added services that, you know, no matter what carrier you're with, we can bring to the table.
Thanks, Brian. So in addition to the insurance products and the consulting that we do, there's much more to our services. We'll go into a little at a time, but one of the big things that's been really helpful for a lot of our clients, and being chamber members, many of you are small businesses, you can't afford to bring in a full-time HR person. Or if you have a full-time HR person, they're wearing several hats, managing the building, doing payroll, taking care of other job qualifications. So one of the things that we made part of our package a couple of years ago is a product called Think HR. And Think HR is 3-tiered. You can see it says Comply, Live, and Learn. The Comply is really a database of information that you can go to at any time. It'll help you build an employee handbook, do job performance reviews and compensation analysis, compliance guides, checklists, and hiring and termination guides. They're all available to you as a member of one of our clients. Learn, we'll skip to the bottom there, is a library of 300 plus training courses. So some of the training courses include diversity in the workplace, customer service, you know, and many more, as you can see on there, safety and wellness and workplace skills. So there's many items there that you could share with your employees. We do have some of our employers that will roll these out to the employees on a monthly or quarterly basis, and just give them a little $5 Amazon gift card if they complete the courses. And it helps you on the back end have your employees updated on different things that are happening in the workplace and in you know, today's crazy environment. So, and then the last is really sometimes the most important. So it's live HR access. So there's a group of experienced and SHRM certified HR professionals that are there to answer phone calls, walk you through a situation, get on a phone call if you're meeting with an employee and just want to put the phone call on in a board meeting, and go through you're having a problem with an employee and how to handle that. It's been very successful for many of our clients. And then after it's finished, you get a written summary of all the calls so that you know that you're doing exactly what needs to be done from an HR and compliance standpoint. And then the streamlining of benefits administration with technology. So what we found is this year is even greater than others. Having an online benefit system is really important. Most of the payroll companies offer them, but they charge you for those. And we're giving online technology to everybody, all of our clients. And what that does is it allows you to communicate with your employees, for them to come on, do some onboarding, um, share company documents, and really have a database for you to go with those employees. In addition to that, all your online administration for your benefits are on one platform. So that platform's there for your employees to sign up for their insurance, make changes, and go through the whole benefit experience. You can house information on these systems, and just have everything in one place. So you're really leaving the paper environment and going to a paperless environment for this stuff. So many enhancements, and the one thing that we like to talk about is we like to talk about our service department. Internally, we have 20 customer service reps, licensed, trained. Our call center is recorded, so we do training out of from the recorded calls, and it's just it's a place for your employees and yourselves to go at any time to take care of any of the issues you have with your benefits. We work as an advocate with you for the insurance companies. It's not necessarily we work for the insurance company, we work for you. So anytime there's a claim or an issue or any type of question, pre-certification, we're there to help you with that, and make sure that we're taking care of the issues for you. So that's really an enhancement. We're the only broker in the Delaware Valley that has as many people in-house. Some other brokers use outsourced customer service departments, but we have them right there in our Bluebell office for you. You'll see here it says exclusive 2% discount with that in United Healthcare. Brian went through that, but it is important to know as a chamber member, your benefit service centers is what I just spoke about. Think HR, online enrollment resources, college tuition programs. So we have college tuition credits that you can get through some of the carriers such as Guardian and IBC, so that you can earn some credit dollars for your premiums. In addition to that, we have a loan repayment program. So one of the perks that we heard about from our employers that they were looking for was a way to retain and hire good employees. And one of the things that younger people are coming out with is college debt, student debt. So there's a loan repayment program that you can participate in through us. Compliance assistance. Compliance has been the biggest part of our year this year. So annual notice compliance bulletins, we do podcasts, and we're always there with our compliance department to update your plan documents, review your plan documents, and make sure that you're following IRS and DOL specifications. Employee communication tools. So we have benefit guidebooks. We have videos that we can do for your employees. Guidebooks go through all of your compliance notices, all of your benefits, talk about our customer service center, and we brand it to you. We put your colors in there, your cover, your pictures, and make it like your own little booklet for your employees. We have a COVID-19 resource center, which answers many questions, and that's on our website. And then we have dental and vision programs through MetLife that have exclusive discounts and plans for chamber members as well. And last, with many people hitting Medicare ages or parents hitting Medicare ages, we have a Medicare department that's there to assist yourself, your employees, their dependents with anything Medicare that you may need. And we look at this as a 4-tier approach: consulting, enrollment, management, and compliance. And by doing that, we bring a whole team of experts in to work with you on each of these matters. And you get a full team of not just compliance, but account manager, customer service team, an enrollment department, and our compliance department, all to help you and your employees have a program that they can appreciate. So with that, we'd like to open it up to some questions for Brian and myself. If anybody wants to ask questions or talk a little bit about anything that we just went through.
Well, everybody's giving thought to their questions. I wanted to thank Ray and Brian. Really, my benefit advisor has been a strong partner of the chamber for, I know, Brian, I'm thinking 25 years or so, certainly well beyond my time here. And I would just want to suggest that if you want to assume all things are equal with insurance brokers, the knowledge that Ray and Brian bring, as well as their incredibly comprehensive portfolio, is definitely something that's worth taking a look at. The Think HR program alone, I can't imagine how much that value is worth financially when you look at the costs of all of those components that would be available to you for participating. So again, I wanted to thank you for the partnership. Thank you both for your time today. And hopefully someone has thought of a question or given some time to think if they wanted to jump in and grab Ray and Brian while they're with us this morning. Chris, I see a hand.
Yep. Never know how to raise my hand on this. So the additional 2% is for the HSA as part of the group. Is that does that subject to the same rollover and all the other rules with the HSA?
So the 2% is for either the United All Savers product or Aetna's AFA, both of which have HSA programs inside of them. And it wouldn't have any impact on the rollover. That would be a separate component. The 2% is just on the premium side. Anything as far as how much you can fund or rolling money over, those rules would be the same. And again, if you're with Blues HSA and you want to roll over to an Aetna one, you can do that very easily. Sometimes you keep the same bank account, sometimes you roll the money over. It really depends on the situation.
Okay, thanks.
I'll go a little deeper if you guys don't mind. So obviously 2020 was pretty rough for everybody. How do you think in an industry where costs have obviously, the initial chart that you showed, just continued to go up significantly since I think it was 1999, given the political climate that we're going to be facing, the continued pandemic climate that we're going to continue to face, how do you see, what are some of the bigger shifts that you see coming inside of healthcare moving forward?
Yeah, great question. Both at, on our side, I mean, everything's going to be consolidation and mergers, right? And so the biggest shift that we're going to see is as all these bigger companies come together, where they're going to put, where do they see their future economic benefit, and how's that going to come back into the plans? And so I'll give you the one that I think is the biggest shift, and I think others are going to have to react to it, is CVS buying Aetna, right? It could potentially significantly change the way that you deliver healthcare, right? And so, you now have all those retail stores as a way that you have an insurance carrier able to reach out to their members, right? It's already built, like they and so you're going to see a big push, which is, trying to increase access to primary care, right? Trying to reduce costs for primary care as a way to better engage people in the long run, as a way to actually, hopefully we catch things earlier, therefore reducing long-term costs, therefore reducing that curve, right? So that seems to be where a lot of the direction is. And again, CVS kind of took the approach of buying Aetna, and, if you've been into a CVS recently, they're rebuilding many of them, especially up in your area, where, they're giving up like 25 or 30% of the retail space because it's that important for them to get bodies into those stores to interact with their primary care, to get their flu shots, to use their pharmacy, right? And so it's a multitude of different ways. And I think that's where I see the biggest short-term change coming is, the carriers have realized that as much as they want to raise deductibles, that they need to lower the barrier for people to get preventative care, get their screenings, get those types of things. And so I think that's a positive change. On the flip side, you know, I think carriers are so fearful of what happens post-pandemic, just in this sense of claims are great now, carriers are making a lot of money, but not necessarily in a good way, right? And so when we come out of this, where's all that pent-up demand, or maybe even scarier, where's all the things we're not catching right now because people aren't interacting with the system, right? Like people aren't automatically healthier, they're just not getting treatment, right? And so what does that have as an impact? So, you know, we're pretty, bullish is the wrong term, but we really are talking to a lot of our clients about trying to get away from a more traditional program and into something where they can see the claims, where you can interact with the health system a little better through some of these level funded programs, just as a reaction that I think it'll give us more data for us to be able to give them better recommendations in the future.
Thanks, appreciate that.
Good question.
Anybody else?
Any other?
If not, again, I'd like to thank Ray and Brian for spending time with us this morning, and great to see all of our visionary members on a Monday morning. If there is nothing else, I'd like to wish you a good week. And if you have any questions, you can certainly reach out to Ray's information is here, or through us to get in contact with him. So again, thanks so much for joining us.
Thank
Have a
you.
great
Thanks,
day.
Pam. Appreciate it. Thanks, everyone.
Bye.
All right.